All right, welcome back to the Dynamic Growth Podcast. Derek, there is a frenzy out there today, and the frenzy has a name. It's called Bitcoin. And one of the things that I wanted to talk about in today's episode is how we can potentially invest in Bitcoin indirectly. I know that you and I did a podcast a couple months back that was a very popular podcast that we had, but that was basically Bitcoin 101. What is it? How can you invest in it? And today I want to get into how you can invest in it indirectly. So I hope you like today's episode. If you do, please share it with a friend, subscribe to wherever you get your podcasts. And Derek, let's get into it.
Yeah. So the last time we talked about Bitcoin, that was about like $30,000 ago in the Bitcoin price. It's had some big swings since then.
It has. And what fascinates me about Bitcoin is, from a portfolio management point of view, is looking at Bitcoin as an alternative asset. And what I mean by that is an asset that we can add to our portfolios to further diversify our investments. And what has a lot of people really excited about Bitcoin, and one of them being Catherine Wood, who is the CEO of ARK Invest, which is arguably the most popular ETF, actively managed ETF out there today, is that she likes Bitcoin as an alternative investment for its ability to provide both outstanding returns, but also not be directly correlated to the day-to-day trading that goes on with stocks or bonds or similar asset classes.
Yeah, and she was an early adopter too. She bought Bitcoin like years ago, and I think one of the biggest noticeable shifts this past year was the change in attitude around Bitcoin. Like, you see a bunch of people that used to be skeptics and now they're becoming adopters, and obviously the most notable example would be Elon Musk, where he was against Bitcoin a couple years back. He said it was only used for illegal purchases on the dark web. And if you read the news, Tesla just announced that they had bought $1.5 billion of Bitcoin and added it to their balance sheet in January. And it actually, they didn't come out and say the price at which they bought it at, but using the rough time frame from January, you can do some math, and it looks like that they made more money in Bitcoin year to date than they did selling cars in 2020 on that $1.5 billion investment. And another example would be Bill Gates, where he was against crypto, and then just this past week he did an interview, and he said he's neutral on it. So that's one step at a time.
That's a big move, yeah. The quote that I love from Elon Musk is he said he believed that the purchase was less dumb than owning cash, which, as you just said, it's totally paid off for him since that purchase. Now, Bitcoin is a very volatile investment, so we would expect that at some point in time we're going to see it correct and pull back, especially after the run it had. But for sure, this year to me stands out because we have seen some universal acceptance among not only retail traders or retail purchasers, but large corporations. We saw, as you mentioned, Tesla. We saw Square make a large purchase into Bitcoin, even though it pales in comparison to what Tesla did. There are even insurance companies out there that have bought Bitcoin. And to me, that is really remarkable because by nature, an insurance company's balance sheet has to be pretty conservative. So for them to jump or to purchase Bitcoin, they have to jump through quite a bit of hoops in order to do that. But again, I think part of the reason for that is not only the ability of Bitcoin to appreciate, but also add some diversification to the portfolio of something other than stocks or bonds. In many ways, in our portfolio, I wouldn't necessarily call it an alternative asset, but we use gold in our portfolio as a hedge against stock loss. In many ways, gold has an inverse relation to stocks. When things get very scary for stocks, a lot of times you'll see gold go up. And with Bitcoin, we've got about a 10-year history with Bitcoin, but I don't think that we have now a positive or negative correlation with any other asset class out there.
It looks like there is somewhat of a market correlation because, back in 2020, when the market kind of sold off there, Bitcoin had quite the correction as well. And that's actually when I purchased that's when I opened my position in Bitcoin. But I think that the skeptics of Bitcoin, I think they make a good point. I think the original thesis of Bitcoin has changed, where I don't think it's a suitable currency because there are some bumps in the road. I think the biggest one being the time it takes to transact. It takes 10 minutes to clear. I think that's a real hurdle. Like if you were going to go to Starbucks and buy coffee with Bitcoin and you have to stand at the register for 10 minutes to wait till it leaves your wallet and wait till they get the confirmation. And I think going forward, it's going to be more so used as the store of value, similar to how gold is. Because, I mean, gold is technically a currency by some metrics, but nobody actually uses gold as a currency where, like, nobody's going to Starbucks and buying coffee with gold. I think it's going to behave similarly to gold and not the US dollar. That's just my opinion. I mean, as it becomes more widespread and like improvements to the system and the network, we could see a change, but I think that's where we're headed.
Well, if you have to wait 10 minutes, at least you have time for your coffee to cool.
Yeah, right.
The trouble that I see with Bitcoin as far as purchasing is the volatility to it. I've made a couple purchases with Bitcoin, and I have done it on two platforms. I did it on Coinbase, which was not the easiest because I had to fund it. And before they allowed me to send it somewhere for a purchase, it had to clear my bank. So it had to wait there for 3 days. Well, Bitcoin, during that period of time, Bitcoin fell enough where I didn't actually have enough Bitcoin in that Coinbase account to make the purchase. So I had to fund it again. Using the Cash App, that wasn't the case. As soon as it funds from Cash App, you're able to send it to anybody that you want. But I think you and I were talking earlier. I think we're still new in this process here. Roughly 10 years. I think as the Bitcoin supply gets bought up, I think we should see. You and I were talking about this. We believe that we're going to see a leveling out of that price, so it's a little bit less volatile than what it is today.
Yeah, absolutely. I think the market's still pricing in what it actually is, and I don't think anybody. I mean, somebody has made a prediction that I'm sure will turn out to be correct, but it's still early. Like you said, there's only a 10-year track record. We're still kind of working it out to see what this thing actually is. And I think we didn't get to talk about Ethereum. And I think one of these days we'll probably do an episode on Ethereum, but I think that ends up being more so like a currency rather than Bitcoin, where Bitcoin will remain as the store of value.
I would say no matter what side of the fence you're on, if you are a believer in cryptocurrency, that it's here to stay and will be the future of either an asset class, a store of value, or a currency, I think the whole process is going to be fascinating to watch.
So let's get into it here. So Nate, I'll let you lead it off. What's the first way you can invest in Bitcoin without actually owning Bitcoin?
Probably the most indirect way to do that is through the Grayscale Bitcoin Trust, ticker symbol GBTC. You can actually buy this. It's an exchange traded fund. You can actually buy it just like you would a stock. And the fund's job, or the ETF's job, is to track the underlying value of Bitcoin. That ETF is currently around $56 a share, so way more affordable than buying one Bitcoin. But the nice thing about Bitcoin is you can buy partial coins, right? You can spend as little as $1 if you want into Bitcoin. I'm struggling with why I would own Bitcoin as an ETF and not just own Bitcoin. When I look at the Grayscale Bitcoin Trust, the expense ratio on that ETF is 2%, which seems extraordinarily high for something that does not pay you a dividend. So to me, it would make more sense just to buy the Bitcoin and hold it in my Cash App account or my wallet, and we'll get a little bit into that here later in the podcast. Maybe some wallets that you can use, virtual wallets you can use to hold your Bitcoin, which will give you a little incentive to do that.
Yeah, and we were talking the other day of why you would choose the ETF rather than just owning Bitcoin, because it's the same volatility, and you're just paying 2% for somebody to manage it. And I think the only thing we come up with is is the liquidity, where if you try to sell your Bitcoin, like it would take 10 minutes, but if you tried to sell an ETF, but I don't even know if that's true, because like you can only do it during market hours. But if you sold an ETF, it would be, instantaneous, like where you would get your money pulled out.
Owning Bitcoin is not without fees itself. When you purchase the Bitcoin, there's a transaction fee that takes place. But the thing about it is once, correct me if I'm wrong, once you buy it, there shouldn't be an ongoing cost other than when you go to sell it.
Right. No, you're correct. Yeah. We were talking also, we talked earlier about ARK Invest, and the Grayscale Bitcoin Trust is one of the holdings in, it was ARKW, right? Is that it?
ARKW, which is the next generation internet ETF. It's actively managed. Grayscale Bitcoin Trust represents about 1.74, 1.75% of the portfolio.
And then that fund also owns Tesla. I mean, we'll talk about Tesla later. About that's sort of an indirect way to get exposure, but so I mean, with ARKW, that would be a really indirect way to get some Bitcoin exposure, but you would definitely have it there, and it's a great fund with a great manager, so you get some other
Yeah. We're not alone. We're a big fan of ARK Invest. To me, they bring different ETFs to the field that are not the rank and file ETFs out there that track the market. You can kind of get into themes with them. The thing that you have to be careful with their ETFs is their holdings. If I look at their flagship, which is ARKK, number one holding is Tesla. If I look at ARKW, which is the next generation internet ETF, again, number one holding is Tesla. So we potentially are doubling down on that Bitcoin play because Tesla owning 1.5 billion of Bitcoin and it being the number one holding of the ETF. So we're getting, I wouldn't say it's a bunch of Bitcoin exposure because they own a lot of other things, but just something to pay attention to when you're building your portfolio.
Right, and even when we're talking about Tesla, like Bitcoin is only, well, this isn't a small number. Let me go back a second. It's 10% of their cash reserve is in Bitcoin. Like that's a huge amount. Like that's a pretty
sure.
sizable bet. So, but even if you're buying like ARKK, which is 10% Tesla, so you got 10% Tesla and then 10% of their cash reserves is Bitcoin. So it's still pretty indirect, but so I mean, let's just talk about Tesla since we brought it up so many times. So another way to invest in Bitcoin indirectly would be to invest in companies with large Bitcoin positions. And yeah, like we were saying, Tesla, 10% of their cash reserves are in Bitcoin.
Before that happened, Square came out and said that they had made a splash into Bitcoin and they purchased $50 million worth of Bitcoin. And when I saw that number, I was like, wow, like that's impressive. I mean, it wasn't not an insignificant amount of Bitcoin. And then, of course, Tesla's purchase of 1.5 billion makes it look like small beans. It's important to note out, going back to the Grayscale Bitcoin Trust, that is actually by far the largest holder of Bitcoin. It represents about 3% of the outstanding coins out there, or I should say the outstanding supply out there.
Yeah, that's pretty crazy. Another one is the business technology company MicroStrategy. They just last week they issued $1 billion in debt to buy as much Bitcoin as humanly possible, and they have 71,000 coins in reserve. And the CEO, Michael Saylor, currently owns 17,000 coins individually.
Yeah,
that's a pretty big bet.
That is a big bet.
Yeah, he's a bigger bull than we are.
Square, not only by purchasing the Bitcoin, but Square is kind of building its, I shouldn't say building its service, building a lot of its services around Bitcoin, and that's through the Cash App. I think, in my opinion, I've tried a couple different ways to buy Bitcoin, and to me that is the easiest. If I want to be able to purchase it, hold it, send it, use it for purchasing, use it to send it to somebody, that's about as pretty dummy proof as an app as you can get.
Yeah, I mean, and Cash App this isn't an ad, they're not a sponsor, but they're the number one finance app in the App Store. So you get the added benefit of, like, at this point, I feel like a majority of people have Cash App. Anybody with a smartphone and is not still dealing in cash, they have Cash App. So it's nice to have other people in the system as well. But yeah, I agree. Cash App is the easiest way to own it. Oh, and if you listen to interviews with Jack Dorsey, he's very vocal about his support of cryptocurrencies and in particular Ethereum. Like, he's a really big bull on Ethereum, and he has had conversations with the creator of Ethereum.
Derek, we both love the fintech space. Square is obviously part of that. The other staple that we love there is PayPal, and PayPal is another company that should see its revenue increase as the cryptocurrencies become more ubiquitous and more used by retail investors. Part of that is because PayPal now allows users to buy, hold, and sell Bitcoin, Bitcoin Cash, Litecoin, and Ethereum on their platform. They charge a spread or a margin, which is the difference between the market price and the exchange price. So that's part of the ways how they make money on that.
That's another good way to invest in Bitcoin indirectly, is to buy the platforms on which people transact them, and that would be PayPal, Square. And also, I think in 2021, two companies are doing their IPOs, and it's Robinhood and Coinbase, and both of those are platforms. The platforms you can use to transact cryptocurrency. I would be more interested in Coinbase because Robinhood hasn't exactly figured out their wallets yet. They said that they're going to the the owners of Bitcoin access to their wallets. Like right now, if you buy or Bitcoin on Robinhood, you don't really own it. You're just buying it as an investment, but you can't really you send it or anywhere, which is a big pain because I own most of my Bitcoin in Robinhood, and it's kind of just stuck there.
Yeah, because you've got on the sale of it's going to create some tax consequence because you got into it pretty early.
Yeah, I don't tell people my position, or people will come find me in my 1 bedroom apartment.
While we mentioned Grayscale earlier in this podcast, I wanted to also say that's not the only ETF that they have that gives you exposure to Bitcoin. They actually have one that is called the Digital Large Cap Fund, ticker symbol GDLC. And this one, along with Bitcoin, owns Ethereum, Bitcoin Cash, and also Litecoin. But again, looking at that one, I'm not rushing out to buy that one because that expense ratio is even higher at 2.5%. So if you bought that and held it long term, I mean, 2.5% compounded over years and years, that's taking quite a bit of your return from you.
Yeah, and like the one thing about currency is it's like it's only good. It's only as good as the people that are using it. So, just a general rule of thumb, I wouldn't buy a cryptocurrency that you've never heard of. It's probably a good bet. But like if you wanted diversification, just buy Bitcoin and Ethereum. And a quick note, Bitcoin Cash is not Bitcoin. Those are two separate things. So if you want Bitcoin, do not buy Bitcoin Cash.
Derek, we've talked about a couple companies here that either use Bitcoin on their platform or have invested in Bitcoin directly. Can you get into maybe a company or two that is maybe used as the hardware to create the Bitcoin?
Yeah, I would say that's another really good way to invest in crypto indirectly is to invest in the companies that would benefit if crypto becomes more mainstream. Like in the companies that make the mining hardware, you would definitely benefit. And we talk about them a lot. They make the GPUs, the graphics processing units, companies like NVIDIA and AMD. And there's actually a nationwide chip shortage due to COVID. So there's actually other reasons why those stocks might be affected. And we could see some government intervention with the chip makers. We have no idea what that legislation would look like, but it's just some interesting stuff to look out for in that space.
This is a bad comparison, but to me, one of the benefits of owning a dividend paying stock is you have two ways to grow. You can grow through the dividend, just accumulating and collecting that dividend, and you can also grow through the appreciation of the stock. In many ways, I see companies like the ones we've just mentioned in Tesla, in Square, in PayPal, and NVIDIA. These are companies that you could benefit because they are involved in one way or the other, either by owning the Bitcoin or by making Bitcoin possible. You can grow through either the appreciation of Bitcoin success or the other endeavors that the company is in. And so I guess if you're looking for a more diversified way to invest in Bitcoin or have Bitcoin exposure, these might be a better way if you're not somebody who wants to go out there and own Bitcoin. This is probably, without a doubt, the number one question I get as an advisor is, what do I think about Bitcoin? And if I talk to somebody who isn't in Bitcoin or doesn't own Bitcoin, the price makes them cringe a little bit to how much that has run up. If you're one of those, you don't want to get into this after it's had quite a run. I know many people are expecting Bitcoin to run much further. You are in that crowd, I believe, Derek.
Yeah, I think it has some room to run. I don't think that's without short-term volatility. Usually you don't see a run of this magnitude without at least one major pullback. There was a kind of like maybe like a 7 or 8% pullback a couple weeks ago where it dipped below 30,000 and then it just blew past it. But I think when it's all said and done, my Bitcoin time horizon is probably over the next 5 years where I would look to like reevaluate the situation. But I'm hodling, as the kids say, as the crypto kids say, HODL, which is, I think it's hold on for dear life. I think that's what it stands for. But that's the vernacular in crypto.
Well, we are long-term investors, whether in stocks, in bonds, in Bitcoin, and real estate. So if you have faith in whatever your investments are, I think you should not be sidetracked by the short-term volatility, no matter how severe it gets. Derek, I know this is a little off topic. We were talking about indirect ways to invest in Bitcoin, but you had brought something to my attention this week that fascinated me a little bit, and I wanted you to kind of get a little bit more into that. And you had mentioned a specific virtual wallet called BlockFi. It does something that maybe our investors might be interested in.
Yeah, there's a couple other ones that do it, but I think BlockFi is the big one, and it's one that was recommended to me. So basically, what they do is it kind of works like a savings account, and I should be very clear here. It is definitely not a savings account. Like, it is not FDIC insured or anything like that. There's not significant risk, I would say, but there's as much risk that comes with buying Bitcoin directly, where they you open up a wallet and they basically lend out your Bitcoin to institutions, and they pay you these crazy high yields for allowing them to lend it out. I think the one on well, you can do this with other cryptocurrencies too on that platform, but the yield on Bitcoin is currently like 6%, which, I mean, it's basically looking at it. I mean, the way I look at it is like if Bitcoin paid a 6% dividend, which is absolutely insane, and they pay it monthly too, which is pretty crazy. Like, find me a savings account that pays 6%, and also there's capital appreciation and pays it monthly. It's like the best of all worlds. It's a pretty crazy. It's a game changer for sure.
But you'd have to warn people who maybe aren't familiar with this or are currently not investing in Bitcoin. You could buy Bitcoin and move it into that BlockFi wallet and earn 6%, but there's nothing from stopping the value of your Bitcoin from being cut in half at any point in time. So it still has its volatility.
Right, and it's also it's definitely less liquid too. You can do one withdrawal a month, which is, I mean, maybe a more accurate description is like a CD or something.
Well, obviously, if they're lending your Bitcoin out, they can't have you withdrawing
Right.
Bitcoin, 100 times a month. They have to have some idea of how much Bitcoin they have in there to be able to lend out.
Yeah, and then I mean, we might as well just talking about buying Bitcoin directly since we talked about indirectly. But I would say the easiest, if we're gonna rank them, the easiest platform to use would be Cash App, and then not the most difficult, but the most advanced way to own it would be probably BlockFi.
Derek, I know that we, at the end of every podcast, we give a disclaimer. And I want to be clear on this that I am not making a recommendation for anybody who is not invested in Bitcoin to go out and buy Bitcoin. And I'm not making a recommendation to buy, sell, or that you should have Bitcoin in your portfolio. I will say personally, though, my views of Bitcoin have changed over the past couple years, especially this year,
Especially because you made money on it.
because I made money out, right? If I lost money, I would say,
Yeah,
forget
yeah,
this.
right.
No, no, when it first came out, like a lot of people, I didn't quite understand it. My question was, how do I value it? And I didn't understand, because I can value a stock. I can look at, the revenue of MasterCard or Apple, and I can figure out what I'm paying for that stock, and I can figure out if it's a fair price or not. And I couldn't do that with Bitcoin. And that was the thing that concerned me a little bit. But if you think about it, you really can't do that with gold either, right? I mean, because gold is a
Right.
supply demand, and Bitcoin is a supply demand. It's got a fixed amount of coins out there. I see personally, if I were to go out and make a bet, I would say I do see Bitcoin becoming more accepted, even more accepted than it is now. If you want an idea of how accepted it is becoming and how quickly it is, I know somebody who owns a paving business that is looking to be able to accept Bitcoin for his business. Now, when you think about a paving business, you wouldn't think of a fintech business. And this is not a shot at paving or construction, anything. I'm just saying that that's how quickly this is growing on. He wants to be able to accept Bitcoin for payment for doing a driveway for you. And if that's the case, now I'm seeing Bitcoin as that alternative investment that you could potentially add to your portfolio to further diversify your portfolio, partake in some growth when it happens, also be exposed to volatility. Obviously, you've got the loss that comes with it as well. But if I look at the average portfolio that we construct, you would have alternative investments represent anywhere from typically 1% to 5% of the portfolio. It's in a position where if it takes off, then you've got a little bit of edge there and you're getting a little bit more return than what you would have gotten in normal years. If your stock or bond position in the portfolio suffers, potentially the alternative investment allows it to holds it up a little bit more. So I see this as, like Catherine Wood, I see this as something that is going to change investing because it gives us one more place that we can put money in to further diversify and gain exposure for growth.
Yeah, and I think like I'm bullish on Bitcoin, but I would echo that point that you made. Like, people ask me, should I buy it? or they're like, I have X amount of dollars. It's like, how much of that I'm looking to invest? How much of that should I put in Bitcoin? And the first question I ask is like, what's your time frame? Because
Right.
if you're on a short time horizon, I would say don't buy any, because it's so new, and this is coming from somebody that is bullish and owns Bitcoin. Because one, I don't want to be responsible if somebody loses money. Like, I don't want to be. It's like, you told me to buy this. It's like, that would be bad. But also, I think it deserves a place in. This is talking about from personal experience. It deserves a place in my portfolio, but I definitely think it's a part of it. It's not the whole thing. Like, you still want to, yeah, you still want to own like good companies, good solid growth.
Yeah.
Like, this isn't a thing you should do. This isn't GameStop or AMC. Like, this is a like, there's a investing thesis behind this, and I think the thesis makes sense. So I mean, that's why I invest in it, and that's why
I think you hit the nail right on the head in the time frame. And if you look at the portfolios that I would maybe add this to, it would be more of the aggressive portfolios. It wouldn't be somebody who is in a conservative portfolio that's looking to use the money within the next year or year and a half or something like that. This would be more for somebody that's a long-term time horizon. They can withstand some volatility. That's my bet. I think that going forward, I think you're going to see it not only more commonly invested in the funds out there, but also the publicly traded companies are going to own Bitcoin on their balance sheet. As Elon Musk said, I mean, that's the thing. If I look at our portfolios right now, in the past 5 years, our cash position has never been smaller than it is right now. And that is just because the cash is not paying anything, right? The money markets aren't paying anything. So if I could move some of that to an asset that potentially has the ability to grow, whether that is through a dividend or an interest or the appreciation, I think at this point in time, it makes sense to do that.
yeah, and like we talked about the microeconomic factors, like where individual firms have sort of added it to their balance sheet, but then also let's talk about the macroeconomic, where we see large scale government programs that are just printing money like crazy, and it doesn't take a rocket scientist or an economist to realize that eventually this is gonna come back to bite us. Like, it's you can't just print free money for free, and I would think that there would be some inflation that we're gonna have to deal with in the either the long term or the short term. And I think the fact that Bitcoin can be a good store of value as a hedge against that inflation, I think that's one of the most interesting aspects. That's got to be like top three of the reasons I own it. It's because I'm scared of like this whole, like, you can't make money out of thin air. Like, stuff actually has to accurately
Yeah.
represent value. You can't just like you can't play games with the monetary system and expect nothing to happen.
Somebody who says, I like keeping a lot of money in a money market because it's safe. To me, I don't know if there's a more dangerous investment than that, because long term, there's no chance that money market keeps pace with inflation.
It's a guarantee that you're losing at least 2%. That's a pretty safe bet. Over the long term, you lose 2% a
Yeah.
year.
And that's not saying don't own cash. We own cash. We talk about our emergency fund. We talk about owning 6 to 12 months in accessible cash. But anything more than that, I mean, yeah, we're losing to inflation. We've got to keep it moving forward. So whether that is stocks, bonds, real estate, gold, Bitcoin, whatever your investment is, you've got to be in something that keeps ahead of inflation. All right, Derek, anything else to add before we head out into the week?
As always, if you guys like the episode, rate, review us on Apple Podcasts, Spotify, everywhere you get your podcasts, and give us a follow on Instagram and Facebook at Dynamic Growth Pod. And if you have comments or ideas for new episodes, email us at Dynamic Growth Pod. We would love to hear from you, and we'll see you guys next week.
As always, Crosby Advisory is a registered investment advisor in the state of Ohio, and at any time you can request our forms ADV 2A and 2B, which go into the business practices and qualifications of Crosby Advisory. Today on this podcast, Derek and I mentioned specific stocks, and we also mentioned specific cryptocurrencies. That is not a recommendation for you to go out and buy them or sell them. Please do your own homework. Make sure they are suitable for you. Crosby Advisory is also a licensed insurance advisor. Insurance products are sold and serviced through Crosby Advisory.